today I want to talk about candlesticks, as your whole chart is made up of candles and you need to know how to read these to actually make sense of what you're looking at on the chart. Let's get into it. So guys, let's talk about exactly what a candle is. As you guys know, when you look at your chart here, you're going to have bullish and bearish candles. These are typically green and red. If you're just starting off on your new TradingView account, your candlesticks will probably look like this. Your candlestick colors are just completely preference and whatever you want to look at. But you can see as we look here, we have bearish candles as price comes down, and then when price moves up, you obviously have a bullish candle. So first off, let's talk about the anatomy of a candlestick. So like I said, guys, you're going to have bullish and bearish candles. Those are the only two types of candles you can have. Although there are variations of different types of bullish candlesticks and different types of bearish candlesticks, there are only going to be green and red candles. So a bullish candlestick will look something like this. Now, when it comes to a candlestick, there are two main pieces. When it comes to the so-called anatomy, you have the body of the candle, which is this big green part, and then you have the wick or the shadow. Some people call them tails, which is simply the line that comes above or below the body. Now, how do these candles actually work? Well, if we bring up the labels here, guys, on a bullish candlestick, the opening price will always be at the bottom of the body, and that is going to be the opening price of the bullish candlestick. And then the wick is simply just going to be the lowest point that candle went within the time period that you're looking at. So here we're on the 12-minute time frame. So this candlestick would represent where price went within a 12-minute period. Once that 12-minute period ends, we will print a new candlestick, which will represent the next 12 minutes of price action. So you have the opening price at the bottom of the body, the lowest price, which is the bottom of the wick, and then at the top wick here, that is the highest price went. You can kind of think of this as like a trail that the candle leaves as that body moves up and down. So let's say your bullish candlestick opens right here. As that candle pushes up, your wick will simply stop at the highest point that price went, and as price comes back down, you will leave that tail, shadow, or wick. I like to think of it as somewhat of a trail, because if price pushes up even higher, right, and then price comes back down, your wick will then stay at that highest point that price went. So if your body of your candle closes down here, that wick will represent the highest point that price went within that candle. So simply put, you have your body, your wick, you have the opening price of a bullish candle at the bottom. The lowest point is the bottom of the wick. The bottom of the wick is the lowest point that price went. And then the top of the wick represents the highest point that price went within that candle. And then once that candle closes, that will be at the top of the body. Now, when it comes to bearish candles, which obviously look like this, it is basically the same thing, except it's just a little bit different. Now, the wicks will always represent the same thing, right? The wick is always going to be the lowest that candle went, whether it's bullish or bearish. The top of the wick is going to be the highest point that price went, whether it's bullish or bearish. But then the opening price is always going to be at the top of a bearish candle, and the closing price is going to be at the bottom of the body of that candle. So you guys can screenshot this diagram. You can also just Google the anatomy of a candlestick, and you can find a million different diagrams online. Just Google it. But this is how these candlesticks are actually formed. So now let's come on over here to the price action, and we again are on the 12-minute chart here. This is just a random time frame that I wound up being on when I drew that diagram, so we're just going to stick with it. But you can see this candlestick will represent the 12 minutes of price action. Then once that 12-minute period is up, we will then confirm that candle and print a new one. And I'm going to go ahead and move price forward. So we'll pretend that 12-minute period is over. We've confirmed that candle, and we're going to print a new one. And boom, you can see that body of the candle started off all the way down here, but you can see how when the body snapped back up, we left that little wick or trail down below. I'm going to do that one more time, zoom in a little bit so you guys can actually see it happen. You print the candle, the body pushes all the way down to 60,759, but you can see within that period of 12 minutes, price pushed all the way back up here, and the candle winds up closing at $60,959. Print the next candle, and you can see that this next candle started off bearish, right? We opened the candle, pushed down to about $60,891, but then the buyers stepped in, pushed the candle up, turning it into a bullish candle, and price actually pushed all the way up to the top of this wick here at about $61,375 before the sellers pushed it back down, closing the bullish candlestick at $61,098. And then that candlestick will confirm, we'll print a new one, and you can see that started off bearish, but then the buyers stepped back in. You have a little bit of a wick down here, but then the buyers pushed price up, extending all the way out to $61,433 before coming back down and finally closing that candle at $61,346. So you can see this is how price action kind of develops as your candlesticks print. 12 minutes goes by, new candle, it starts off bearish, and then you can see it flips bullish as you push price up, and you close that candle right here at about $61,500. Print another candle, another 12 minutes go by, you started off bearish, but then it flips bullish, wicks all the way up here, but again closes as a bullish candle, closing that price at the top of the bullish candlestick. And again, remember on the bearish candlesticks, the closing price is not at the top like a bullish candle, but the closing price on a bearish candle is at the bottom of the body. Does that make sense? You can see where these candles finish. Bearish candle, now it flips bullish, so that close is going to be up here. Next candlestick. This one winds up being bearish. You close that at the bottom of the body. So hopefully this kind of shows you guys how these candlesticks actually move, how they print. And now let's move on to the next part of this video, which is talking about different types of candlesticks, because not all bullish and bearish candles are created equal, as sometimes you can look at a candle and if it's forming in a specific way, it could indicate some kind of reversal. For example, when you have a long wick on the bottom of a candle, this could indicate that buyers are stepping in, right? Even if you have a bearish candlestick, if you have a long wick at the bottom of that candle, basically what this says is the sellers tried to push price down, but the buyers stepped in and ate up all that price, closing the candle in a little bit of a bullish manner. Although this is a bearish candle, having that long wick can show that buyers did step in and buy up a lot of that price. And you can see as you move price forward, you start to get a little bit of a reversal. Now, again, this is not something you can trade alone. This is just the basics of understanding how charts work and how to read candles and what each candle tells you, right? Because each candle is going to give you information that you want to add into your trading plan and kind of your theory on where price is going to go. And you can see long wicks down here showing that price was being pushed down, but kept getting bought up by the buyers, and you start to see price creep to the upside. And you see that does continue up. Now, this is going to be a little bit more useful when you're coming to a bottom, right? Or you get after a big move to the downside. This is a little different because we got to move up, and then you kind of got these long wicks showing that you could continue to the upside. But this is going to be more useful when you get a big move to the downside. Like you can see right here, although this is a bearish candle, you could potentially look at this as a sign for a potential reversal. And again, a potential reversal does not always mean a massive move up. It could just mean a small push up, right? So again, you want to take this all into consideration when you're trading, and we're going to talk about a lot of that in the upcoming videos in this series. But you can see we got a big move down, price tried to go lower, and you can tell that because this candle started off as a big body, but then buyers came in and bought up price before closing the candle up here, and that would indicate that you could potentially get a little bit of a reversal, and you can see price did come up here. Now on the flip side, you can use this in the opposite direction. You can see here we got a little bit of a ride to the upside, and then we got a big push up, but then the sellers came in and then just ate that entire wick up, showing that, we tried to push up here, but then price got, chewed back down, and there was really no acceptance above that level. You didn't have enough thrust to get through there, and then this would potentially indicate that you could get a little bit of a reversal. Now, I guess the first candlestick pattern I'll go over is going to be the bullish and bearish hammer candle, which is essentially what I just talked about. So for a bullish hammer candle, this is what that is going to look like. Ideally, you do want these to be green, but again, even if you have a red candle that has a long tail on the end or a long wick at the bottom, you could potentially still look at that as a potential reversal, but this would be again at the bottom of a big move to the downside ideally. So I will just draw this out with my brush to save some time. Let's just say you had a pretty decent move to the downside and you start to see candles like this form where you have a long wick on the bottom, but the candlestick is closing bullish with the body at the top with either little to no wick at the top, but a long wick on the bottom. Again, showing that sellers trying to push price down, but the bulls came in and ate that all up, indicating a potential reversal back to the upside. And again, you will oftentimes see that happen at the end of a move to the downside. Now, again, whether that move is big or just a little retracement before more downside is a whole nother thing. You have to incorporate different forms of TA to identify the trend, but this is kind of what you're looking at when you're trying to read the candles. Now, on the contrary, you can have a bearish hammer candle, which is basically just going to be the opposite, where you have a long wick on the top and a small body with little to no wick at the bottom. And again, this is going to happen in the exact inverse oftentimes. You will see if you're having a large uptrend where you just have a big trend to the upside. If you're starting to lose steam, sometimes the buyers will try to push price up, and then the sellers will come and chew price back to the downside, leaving that long tail or wick at the top of the the candle, showing that you could be potentially looking for a reversal to the downside. So when you're looking at this on price, you're looking for a trend to the upside, and then sometimes you can spot those bearish hammers indicating a reversal back down. And then again, the bullish hammers are going to be the complete opposite. And that ideally is what you want them to look like. Now, these are identifiable on any time frame, whether you're trading the high time frames, the low time frames, it doesn't matter. But again, if you are looking for a bearish reversal, you're going to be looking for one of those high wicks, right? Or those tall wicks at the top of the candle. Ideally, you want to see it be a red candle. But again, just generally when you read these candlesticks, a long wick on the top could be indicated as a bearish candle, right? And again, the smaller the body and the taller the wick, it's kind of the more reliable that could be, right? So you see a big wick at the top here showing that buyers tried to push price up, and then the seller stepped in, chewed price back down here, closing the candle somewhat bearishly here, and then you get a little reversal to the downside. And you can see here, this isn't really a bullish hammer candle, but you can see just that long wick could indicate that, you know, sellers tried to push price back down, but the buyers stepped in, pushing that candle all the way back up. And there is a free indicator on TradingView, guys. If you just come on over here and you type in hammer, I don't know if there's one for bearish hammers. If you click on this one, hammer bullish, I believe these are TradingView indicators. You come on over to technicals, click patterns, scroll on down where it says candlestick patterns. You could turn them all on, or you can kind of isolate them here. We're going to go over doji candles in just a second, but you have all your different candlesticks here, and you could just turn them on, and you can see TradingView will nicely mark these out for you when it identifies a bullish hammer. And you can see here, you have a pretty decent wick to the downside and a smaller body at the top with no wick at the high. That would be indicated as, hey, you might be able to get a reversal. You get a push back to the upside. Now, I don't know how they calculate this. Well, they will point out a lot of them, but you can see here, again, like this is a pretty good example of what a bullish hammer would look like. Now, again, it's a red candle, but that big wick down here on the bottom, I'll move my mouse so you can see it. With that, you know, this is almost like exactly like the diagram that I just drew. Now, again, you do not want to trade this alone. You can see here we had another bullish hammer candle. Now, price did push back up, but it wasn't really a significant move. But that's basically how you would read a bullish hammer candle, and bearish hammers are going to be the exact opposite. Now, moving on to doji candles, guys. Doji candles typically have a big wick on the top and a big wick on the bottom, with the body of the candle landing right in the middle, right? This indicates indecision in the market. This indicates that the buyers were pushing up and the sellers were pushing down, but they kind of came to a stalemate, landing the body of that candle smack dab in the middle with the wick at the high and the wick on the low, showing that the buyers tried to push price up, sellers ate it back down, and then the sellers tried to push it down, but the buyers ate it back up, closing that candle in the middle. And this will generally pop up when you see price kind of just moving in a sideways, just straight, boring move. You can see right here, tall wick on the top, low wick on the bottom, body right in the middle, and we kind of just wiggled sideways for a little bit before finally getting a move. And then oftentimes, this is what the price action looks like when you start to see doji candles. This is not necessarily an environment that you want to trade, in my opinion. It just shows complete indecision. You have the tall wick on the top, long wick on the bottom, body closes in the middle, and price is just kind of stagnating, going sideways. But essentially, it's just showing buyers and sellers absolutely butting heads, and neither one is able to win. And then eventually, you will get a breakout or a breakdown. Like you could even see here, you have some dojis. Price just kind of goes sideways. Right here, doji, price is just kind of going sideways. And then here, doji, we just kind of went sideways before finally getting a move. And then zooming out on the price action, guys, you can just kind of see, if you see price moving around and you get a big wick up and a big wick down, whether it's a bullish hammer or not, I typically do see that as bearish. It just shows me that buyers tried to push price up and they were unable to break through, right? Just shows weakness of the buyers as those sellers stepped in and dominated the buyers before a big move to the downside. And then as you come down here, you can see you have this, technical bullish hammer right here, even though it's a red candle. Again, the only reason I would identify this as bullish is just because it's after a big move to the downside, and then you get the big move up. You get a big move down, long wick to the bottom, but price snaps back up very quickly, and then you get a reversal to the upside. So there you go, guys. There's a quick introduction to candlesticks. When you're looking at your TradingView chart that you just set up from the last video, you actually know what you're looking at. And if you want to know how to set up your charts from scratch, go ahead and check out this video. And if you want to learn about Fibonacci retracements, go ahead and check out this one. And with all that being said, that's all I got for today's video. See you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, maxed out, put the